If you're worried you can't make your next credit card payment, call your card issuer before you miss it. Some issuers may offer hardship or payment assistance options, including a reduced payment, a lower interest rate, waived fees, or a temporary change to your account terms. But there can be trade offs. Your card might be frozen or closed, interest could continue accumulating, and the assistance could work very differently from what you expected. So before you agree to anything, you need to ask the right questions. In this video, I'll give you the exact checklist to use on that call, the warning signs to watch for, and the alternatives to consider if the proposed payment is still unaffordable. Why this matters. This subject matters because revolving debt remains enormous. According to the Federal Reserve Bank of New York, Americans carried approximately $1.25 trillion in credit card balances in the first quarter of 2026. Federal Reserve data also showed an average interest rate of 20.94% across credit card accounts in May 2026. At rates around that level, making only the minimum payment can keep a balance hanging around for years. If income drops because of reduced hours, job loss, illness, divorce, or another emergency, one difficult month can quickly become several. The Consumer Financial Protection Bureau advises people who cannot pay their credit card bills to contact their card company immediately. Many issuers may be willing to change a payment when a customer is experiencing a financial emergency. That does not mean everyone will qualify, and it does not mean every issuer offers the same deal. It means asking early may give you options that waiting cannot. So by saying that, what a hardship program is? A credit card hardship program is not debt forgiveness, and it is not one standardized government program. It is a temporary arrangement that an issuer may offer based on its policies and your circumstances. The company may call it a hardship program, payment assistance, financial relief, account assistance, or something similar. Possible accommodations may include a lower required payment, a reduced interest rate, waived fees, a changed due date, or a temporary pause or deferral. None of those benefits is guaranteed. The exact offer may depend on your payment history, the reason for the hardship, your income and expenses, and what the issuer believes you can realistically pay. Two customers with the same bank could receive different options. That is why you should not rely on a viral chart claiming that a particular bank always reduces its rate to a specific number. Unless an offer comes directly from your issuer or your account, treat it as an example, not a promise. But before calling, work out three numbers. First, your current monthly take-home income. Second, your essential expenses: housing, utilities, food, transportation, insurance, medicine, and other necessities. Third, the payment you can genuinely afford after those essentials, not the payment you hope you might manage in a perfect month. Do not exaggerate your hardship, and do not hide income. Be honest and specific. Agreeing to a payment you cannot maintain may leave you in a worse position if the arrangement ends after one missed payment. Use the telephone number on the back of your card or inside the issuer's official app. Do not call a random number from an advertisement or an unsolicited message. Here is a straightforward way to begin. I'm experiencing a financial hardship because of. Briefly explain the reason. I'm concerned I may not be able to make my regular payment. I can currently afford approximately amount per month. What payment assistance or hardship options are available on my account? If the first representative cannot help, politely ask whether there is a payment assistance, account assistance, or hardship department. Do not demand a specific interest rate you saw online. Ask what is actually available for your account. The 8 questions. If the issuer offers a plan, do not accept immediately. Write down the representative's name, the date, and the details, and ask these 8 questions. Question 1. What will my new interest rate and monthly payment be? Get actual numbers. A smaller payment can provide breathing room, but it may also extend repayment and increase the total amount paid over time. Question 2. How long will the arrangement last? Ask for the start date, end date, and whether the plan can be renewed. Temporary relief only helps if you understand what comes next. Question 3. Will interest and fees continue accumulating? A payment pause does not necessarily mean an interest pause. Ask separately about interest, late fees, annual fees, and any penalty rate. Question 4. What happens to the card? Ask whether purchases will be blocked, whether the account will be frozen or closed, and whether the credit limit will change. Do not assume you will still be able to use the card during the plan. Question 5. How will the account be reported to the credit bureaus? Ask how the issuer will report the account while you are following the agreement. Also ask what happens if the account is already past due. Do not assume that enrolling will erase accurate late payment history. Question 6. What happens if I miss one payment under the new arrangement? Could the plan be canceled? Could the old interest rate return? Would fees resume? You need to understand the failure conditions before accepting. Question 7. What happens when the program ends? Ask whether the original rate and payment return automatically, whether the account remains closed, and what the expected balance will be at that time. Question 8. Can I receive all terms in writing before I agree? If the representative cannot provide written terms, ask where the details will appear in your online account, email, or statement. Read them before authorizing automatic payment or accepting the plan. The credit score question. People understandably want a simple answer about credit scores, but the honest answer is that the effect depends on the arrangement and your overall credit profile. The plan itself may not automatically create a negative scoring event. However, missed payments before enrollment can hurt. A lower credit limit or closed account could also affect credit utilization, and lenders reviewing your report may consider the account's status and payment history. Ask the issuer how it will report the account, but remember that a representative cannot guarantee an exact number of credit score points. Credit scores consider multiple factors, and different scoring models may react differently. Most importantly, do not intentionally miss payments because someone online says that doing so will unlock a better deal. Confirm your options directly with the issuer before making a decision. If the offer still doesn't work, a hardship arrangement is not automatically the best solution. If the proposed payment remains unaffordable, accepting it may only delay the problem. One alternative is speaking with a reputable nonprofit credit counselor. A counselor may help you review your budget and, when appropriate, discuss a debt management plan. In a debt management plan, you generally repay the debt through a structured payment administered by the counseling organization. Ask about fees and verify the organization before enrolling. Be especially careful with debt settlement companies. The CFPB warns that these businesses may charge expensive fees and may tell customers to stop paying their cards. Stopping payment can lead to late fees, penalty interest, credit damage, collection activity, or lawsuits, and a settlement company may not successfully settle every debt. If the debt is impossible to repay, even with reduced interest and a realistic budget, consult a qualified professional about all available options, including the legal implications of bankruptcy. The correct choice depends on the complete financial picture, not one balance or one video. Ending. Here is the takeaway. If you believe you may miss a credit card payment, act before the due date when possible. Call the number on the back of the card, explain the situation honestly, and ask what assistance is available. Do not focus only on the lower payment. Ask about the interest rate, fees, account restrictions, credit reporting, missed payment rules, and what happens when the plan ends. Then get the terms in writing and compare the offer with what you can truly afford. Hardship assistance is not secret money. and it is not guaranteed. But knowing what to ask can help you make the call with your eyes open. If you want the next video to explain how a hardship plan may affect your credit report and credit utilization, subscribe to the Lazy Wealth Bro. We're going to separate the useful options from the expensive mistakes, one term at a time.